All right. We are now at variation number 5 when it comes to the buying setup, as far as the first type of setup the market will give you when it comes to the double bottom. Okay, so that's just the variations of how they're gonna present itself to you in the market. Okay. Um, for this one, it's just like the number 4, but normally it'll still be considered like a triple hit. But market will typically give you something like this, right? Boom, and then they'll go up, right? And then come back down, right? Boom, and then go back up, and then it come back down like so, right? Boom. All right. Now it's just like before, right? It's a triple hit, but you notice that you had the first 2 hit way before. Compare, sometime you could get it right in the middle, right? So I'm just showing you. I want you to understand that it will look different every single time, and those are normally how it presents itself. That way, you are not confused by that. Okay. Now, just like before, all technical analysis has to be based off your highest time frame, which are your monthly, your weekly, and then your daily. So all your technical analysis, all the setups that you look for to look for buys has to be based off month, week, day, and then we drop down either to a 4 hour time frame, H4, right, of 4 hour, right, time frame. Sometimes I say H4. You wait for your price action, which would be the engulfing price action. Okay, the engulfing price action. PA. That's what PA. All right, those are the only price action that we trade. Now, there's nothing wrong with, again, like I did mention that before. There's nothing wrong with taking the daily price action. Right, that will be a daily PA. Right, so if you are somebody that's going to take a daily price action, either if your technical analysis is either off the month or the daily time frame, you will drop. If the technical analysis is on a monthly or weekly, you will drop down to the daily time frame. That will be the lowest time frame you will use. Okay. If the technical analysis is in a daily time frame, you could just simply wait for that price action within that time frame, just to make your life a bit easier. All right. And also, taking daily price action also give you a better ability to trade more than one pair, about 3 or 4 max. Why? Because you're waiting for a daily price action. So that means your price action will be presented to you at the end of the day. So you don't always have to be in the chart looking for, oh man, 4 a.m. 4 a.m., 5 a.m., 9 a.m., none of that time frame. And you're not somebody that's gonna be like, hey, I trade the New York session, or I trade the London session, I trade this Sydney session. No, you trade the setup that is presented to you based off your technical analysis. If it falls, well, since you're taking the daily time frame, it will always be available. I repeat, it will always be available to you at the end of the day, and that's one strict time frame, which is either, for me, it will be 5 p.m., right? Or for you, it will be 4 p.m. or it will be 6 p.m. Okay. Um, at the end of the day, of course. Now let's go ahead and go over, just a little bit more example of that. That way you understand how um, that variation may look like. So here we go, right here, right? Variation number 5. You see that right there? Now this one, you can see it, which is this. I put it like so because in the market, a lot of time what you get is the last selling candle, right, will look like this, but it'll give you an extended wick into the zone. Okay. And then to go up, and then right here, this could look like this, and then it falls more into the zone. So that is just, again, another variation of the double bottom, right? So also along with this, right, you notice I put the same price action in there as far as the continuation. We got one bullish engulfing, where the market itself, the bullish engulfing engulfed the last 2 selling candles, engulfed the last 2 selling candles, make it very repetitive. That way you learn to truly understand and master the price action itself for what it is and taking it for what it is. Now, I'm going to show you another one again, right? Which falls under the same category, okay? When it comes to the number 5 variation. Now, do you notice that market came down, right? So that's the first hit. This right here is the first hit, but market range, right? So it pretty much did this, right? It fell down, boom, and it did this, and then went up, and then to come back down, and then to go up. So that right there is the first bottom, and this right here would be the second bottom. Okay, so again, these are the way the market will present itself when it comes to the double bottom. Again, that's just another different variation of number 5. All right. So it depends on which one you choose to do when it comes to your flashcard. If you do this one and the other one also, right? If you do this one and that one also, which will be really, really dope. That way you have both variation in front of you. Again, that's why I put all of them in the book. That way you see how they look like, because you never know which variation you're going to get. And if you got the book with you, you could just literally look at it like, oh, yo, that's that. All I'm waiting for is this, and that. Okay. So again, when you draw this illustration either on your sketchbook or your composition notebook, again, I need to know all the information that you can give me. Okay. All the information that you can give me about this. And whatever you're missing, of course, don't worry about missing on anything. I want you to give me your very, very best. All right. And if you make a lot of mistakes, that's perfect, because I know exactly where you at and I could guide you more effectively. Don't worry about that. It's not the way you need it to be. What I need is the best of what you got, and then post that. And then I'll adjust accordingly. I'll show you, hey, you was missing that. Chances are you're not going to miss a lot, right? You might just miss, telling me that, hey, if you notice that I had a bullish engulfing last time, or you might miss the fact of you telling me that, when market comes back to the zone, right, I'll look to the left. I need that for every single flashcard, right? Why am I looking to the left? I'm looking to the left because I'm looking back, right? I'm looking to the left because I want to see what the market did last time. Based on what it did last time, I'm looking for it to give me the same thing again. Once it gives me that, I'll go ahead and take that trade to go up. That's the reason why I did this right here. The one bullish candle that engulfed the last two bearish candles, I put it there 3 times. So when we look to the left, right, last price action they give us was a bullish candle that engulfed the last 2. So I'm anticipating something similar to it. And look at that. It gives me exactly the same thing. And there I would just take that for my buy to go to the side. Okay. Like I said, very, very simple, straight to the point. And again, that is variation number 5. Okay. Just like this one, right? It just happened to fall, it consolidate, and then shot up, and then boom, there goes the second bottom. So first one, and then second bottom. So you giving me all the information that you could possibly give me about that would be very, very dope. Okay. And I'll see you guys on variation number 6, where it will be ranging at the very end of it.